Hello everyone, welcome to Laexcellence IAS Academy. Recently, NBFC said that the overexposure of NBFCs to the infrastructure and power sector may cause risk in the NBFC sector in India. So in this context, we will discuss what are the NBFCs and what are the risks faced by them with respect to IMF said. So let us discuss. The NBFCs, non-banking financial corporations are in India. They are registered under Companies Act of 1956. Registered under Companies Act of 1956 and regulated by Ministry of Corporation Affairs as well as RBI. The RBI major activities of the non-banking financial corporations in India include: one is that they can go for lending as well as making advances with respect to anyone in the country, and second is that they can go for acquisition of shares, bonds, equities, debentures in the Indian market issued by the government entities as well as non-government entities. These are the major activities can be taken by the non-banking financial corporations in India. And some of the activities which are banned are not considered as the major activities of non-banking financial corporations. Means some of the activities which are should not be taken by the non-banking financial corporations. One is that they should not conduct any agriculture activities. Second one is they should not go for any industrial activities, and third one is trade, means buying and selling of any goods in the country with respect to non-banking financial corporation is not allowed. And fourth one is they can't go for services, means any major activities which is service is not taken by the non-banking financial corporations in India. Fifth one is that construction of any immovable property and selling and buying such immovable property in India. Means major business of the non-banking financial corporations of India are not these activities. Okay, the major activities include lending and making advances, and also acquisition of shares, bonds and debentures issued by government and non-government entities in India. This is with respect to non-banking financial corporations. And also there are two type non-banking financial corporations, NBFCs. One is non-deposit taking NBFCs, means they should not take any deposits from the public or any other entity in the India. This one type. And second one is that deposit taking NBFCs. These deposit taking NBFCs should only take time deposits and should not accept demand deposit. Demand deposits are not allowed for the deposit taking NBFCs in India. And also these NBFCs, whether it's non-deposit taking NBFCs or deposit taking NBFCs, are not part of the payment and settlement system in India. Payment and settlement system in India is only for banking system, and NBFCs are not part of the payment and settlement system in India. And also these deposits which are taken by the NBFCs are not covered under the scheme of the Deposit Insurance Guarantee Corporation of India. These are the basic things with respect to NBFCs you should note, and also UPSC can ask such very basic things in UPSC examination. And now we'll discuss and also jump into the major concern highlighted by the IMF. What is the IMF said with respect to Indian NBFCs in its report? Indian NBFCs overexposed to one is infrastructure, another one is power structure. Infrastructure and all the power sector. These are the two major areas to which the Indian NBFCs are overexposed. Here, first thing you should note about this infrastructure and power sector is that these both sectors are relying on long-term lending. Long-term lending means whenever any entity or any person lends to this infrastructure and power sector, should not expect return as soon as possible. Means the return in this particular sectors are long. Means maybe it's take more than 10 years or 15 years. Sometimes it may also take 20 years as well. So the infrastructure and power sector expecting any lenders to lend for them in a long-term nature. But the NBFCs who lend to this particular sector, infrastructure and power sector, borrow from two sources. One source is that they can borrow from market. Market is that any kind of mutual funds, right? Any debentures, bonds, such kind of sources can be one source. And second source, they also borrow money from the commercial banks in the Indian market. Commercial banks, right? Scheduled commercial banks or public sector banking, they will lend money to the non-banking financial corporations, and these financial corporations, by taking money from this market and commercial banks, will lend again to the infrastructure sector or power sector or any other sector. But IMF said that Indian NBFCs are majorly overexposed to infrastructure and power sector. But you can note that NBFCs borrow from market long term as well as short term borrowing. When commercial banks lend money to the non-banking financial corporations, it's majorly in a short term. Short term, months means below 10 years, like that. So here you can note that NBFC is buying or borrowing money from the market for a short term, and they are lending money to the power and infrastructure sectors in a long term nature. Here you can note that there will be a liquidity mismatch, right? Liquidity mismatch. Liquidity mismatch. How? They are borrowing money for the short term and they are lending for the long term, right? And they can't expect their profit in the investments in a short term nature. As a result, they can't pay these individuals where they have borrowed in that particular period, right? In that particular short period of time. And there will be a liquidity mismatch in the NBFCs. This happened in the recent past. With you all guys may be aware of that IL&FS crisis. IL&FS crisis happened recently, before 4 to 5 years back. This was the major reason. There was a liquidity mismatch in the particular NBFC sector. IL&FS was the major company which went bankruptcy, but the major NBFC sector in India faced this liquidity mismatch in the recent past. IMF saying that this liquidity mismatch might be arised in the future as well. So this liquidity mismatch will lead to stagflation in the country. Stagflation in the country. But what is the stagflation? Right? IMF said that this NBFC crisis, or exposure of the NBFCs to power and infrastructure in the country, where there is a liquidity mismatch, might lead to called stagflation. What is stagflation? Stagflation is nothing but, inflation means high inflation in the country. High inflation in the country, but the growth means stagnation. Stagnation in the growth. But we already discussed in some earlier videos where we highlighted that whenever the high inflation, there will be what happen? The high investment, right? There will be a employment generation. There will be a more demand. All these factors will lead to growth. This is the general perception and also general nature of the inflation in any country. But when this stagflation occurs, there is a high inflation as well as the growth is stagnant. There is no growth in the Indian economy or any particular economy. When stagflation occurs, will result into no investment. No investment. Why no investment? Because interest rate in the market are high in this condition, and there is no demand. Why there is no demand? Because inflation is very high, because there is no demand and also there is no employment. Employment means unemployment is very high in the economy when stagflation occurs. This is the futures of the stagflation. Okay, said that in this condition, IMF said that in this stagflation condition and there is a NBFC crisis, it may lead to commercial banks who have lent NBFCs in a high manner, these commercial may face difficulty in maintaining capital adequacy ratio with respect to 9%. This is highlighted by the AMF in the recent report with respect to Indian NBFCs. And you should aware about with respect to these NBFCs and how they are overexposed to infrastructure and power sector in India, and also how it might lead to stagflation in the country. But also knows that what is the stagflation? There is no investment, no demand, and no employment, means unemployment is high and the growth is stagnant, and also there is a high inflation in the country. So thank you.